Hello everyone, I'm Lance. Welcome to my channel. There's an ETF that surged 100% in just 1 month. Should you still chase it now? Let us check, listed in early April. By May 8th, already more than doubled. ETF AUM has surpassed $6 billion. $1 billion flowed in on a single day, rocketing it straight into the top 40 by trading volume. The track record speaks for itself. Its full name is the Roundhill Memory ETF, ticker DRAM, the world's first ETF dedicated entirely to memory chips. If you're holding it right now, you must be feeling pretty good. But the story I want to tell today is from 25 years ago. Back then, there was also a stock everyone was chasing, with a reason that sounded just as convincing. Listen first, then decide if you still want to feel good. Let's start with the basics. Full name, Roundhill Memory, ETF, ticker DRAM, listed April 2nd. Annual fee 0.65%. It holds just 9 stocks. 9 stocks, highly concentrated. Micron, SK Hynix, and Samsung combined make up 72%. So buying this ETF is essentially a bet on these 3 companies. And the top 2 are both Korean. Why is memory so hot right now? Everyone knows AI training needs GPUs, but fewer people realize AI inference, where the model actually answers you, is even more memory hungry. Every conversation requires rapid data retrieval and processing. The bottleneck? HBM, high bandwidth memory. It's a core component inside every NVIDIA GPU. How big is the demand? In 2023, the global memory market was $111 billion. By 2030, forecasts say over $240 billion, more than double. That growth thesis? Totally valid. Let's take a closer look at the 2 most important names in this ETF. SK Hynix is NVIDIA's primary HBM supplier by a wide margin. It holds 62% of the global HBM market. Its entire 2026 production is already sold out, orders booked through year-end. Annualized HBM revenue around $8 billion. In Q1, operating margin hit 72%, an all-time high, and revenue nearly tripled. NVIDIA's next platform, Rubin, still uses Hynix as its main supplier. Bottom line, the most indispensable link in the AI memory chain. Samsung is bigger overall, but it fell behind on HBM. About 35% market share, ranked second. Earlier yield issues kept it out of NVIDIA's supply chain. In 2026, it's back, yield above 90%, customers recertified. Q1 profit tripled, and it plans to expand capacity by 50% this year. The thesis? Lower valuation from early setbacks, with upside if it lands more HBM4 orders. A Micron and SanDisk, 2 names you can't ignore in the memory chip space. Both are growing revenue fast, and neither looks expensive yet. SanDisk's forward PE is just 11 times. The risks are real too. Micron has to fight SK Hynix and Samsung for HBM market share. SanDisk has to navigate the NAND price cycle. All right, now let me deliver on the story I teased at the start. Cisco's stock went from $10 in 1997 to $80 in March 2000. That's 700% in 3 years. At its peak, it was the most valuable company in the world. Analysts slapped on PE multiples of 150 to 200 times. The internet did get bigger, Cisco's business did grow, but by 2002, the stock was back below $10, down over 80%. Today in 2026, Cisco still hasn't recovered to half its year 2000 peak. You picked the right company, you're still waiting 25 years later. From 1997 to 2000, everyone said the internet would change the world, and they were right. Cisco's routers were the only road for internet traffic. Every data packet had to pass through Cisco's hardware. Sound familiar? That logic is almost identical to AI inference has to go through HBM today. This isn't a prediction that memory chips will crash. It's a reminder. The right story and the right price are two completely different things. Most people stop asking the second question when the first one sounds good enough. First, the short-term case still holds. Hynix's 2026 capacity is sold out. Supply and demand are clear. Samsung's yield recovery adds a catch-up trade. AI capex keeps growing. Momentum investors aren't necessarily wrong here, but the biggest risk is further out. First, memory is cyclical. Prices will drop quickly. Second, chasing this rally now leaves almost no margin of safety. Third, Cisco's lesson isn't that tech crashes. It's that even if the story plays out, buying at the wrong price means waiting a very long time. Here's my clear-cut advice. If you're already holding, don't panic. The fundamentals haven't changed. If you haven't bought yet, don't chase this price. A sign that memory prices are softening. An earnings miss from one of the big names. The moment sentiment flips from euphoric to pessimistic, that's when the real opportunity shows up. The era of memory chips may have only just begun, but Cisco taught us. The right story, bought at the wrong price, can still make you wait a very long time. I'm not chasing this price. I'm waiting for the market to make a mistake.